Good afternoon. It is July the 26th, 2017, and time to recap our trading today. We'll start with our disclaimer. Hypothetical simulated performance results have certain limitations, unlike an actual performance record. Simulated results do not represent actual trading. Also, since the trades have not been executed, results may have under or overcompensated for the impact, if any, of certain market factors such as lack of liquidity. Simulated trading programs in general are also subject to the fact that they're designed with the benefit of hindsight. No representation is being made that any account will or is likely to achieve profit or losses similar to those shown. Well, we had to do a little tap dancing today, a little sliding around. Started off today with a loss in crude. Able, thanks to the volatility we had after the EIA inventory reports hit, to make it a winning day. We made our business plan at plus 40 and then came in and had very poor trade location on our trade into the close. But we're able to scratch that trade. We're able to repair it. Got a little lucky. That trade is, crude is the toughest read on where it's going to close. That trade is designed to help us really, is the market net long, net short? Will we see a squeeze? What segment of the market's net long, net short? And just getting down to reading the tape. So there's value in that. You probably don't want to trade it, but especially given the last 3 weeks, we haven't been able to shake the money tree like we were a couple of weeks before that. So let's take a look at what we did today. The E-mini was absolutely dead. Nothing. We wanted to sell failure to take out 78 to 80. Okay. We had a buy 75 to 73. The only way you could have made that a resting limit sells, and your sell came here off that information, and your buy came here. So limit buys, limit sells, the only chance you have on a day like this. And we just don't have a lot of volatility to work with. I think it's still going to go higher. No doubt in my mind we're going to see prints above 2,500. I just don't know when and what it'll take to get us there, but I'm pretty confident that we're on our way. Looking at the F1 screen, higher low, higher high. Market is still trading higher. F1 says find a place to buy it. Looking at our F2 screen, it is a B on a one-day basis, isolated, but if you put all this stuff together, there are P's behind it, and this would be a P also. So the longer-term time frame says higher. The shorter-term time frame says we can sell it. If we can't break the 2470 area, we can go back to the long side. So right now the trade would be the same. Selling failure to take out 78 to 80. Then 84, 86 for sell 2. A little bit lower right here, so maybe a 70, 72 by 1. 65, 67 by 2. Okay, we have a lot of news tomorrow. Durable orders plus 3.5%. Transportation plus 0.4. Cap goods plus 0.3. See where Caterpillar has finally turned around. Stuff's going on beneath the surface here that showing that the foundation, the groundwork's being laid for growth. Trade balance minus 65. That's usually where it is. Jobless claims 240. I don't think anybody pays attention to those tomorrow. Chicago National Activity Index plus 0.1. No one will pay attention to that outside of the Fed. Nat gas inventories, don't know, but probably plus 50B. And KC Fed last month was 11. The focus will be durable orders ex transportation right there. when you first get into futures trading, you probably come from a stock background or a physical commodity background, and you make the right calls. And your time frame is you're doing swing trading or position trading, and you give it a lot of room. You don't get too worried about it. And then after a while, when you get into futures, you see that, you know, if I just sharpen my pencil a little bit, it would have an immense impact on my bottom line. And that's certainly true, but that process of shortening your time frame really makes for more difficult trading. And sometimes it can take you years to go from a swing trader to a position trader in futures. Okay, on treasuries, lower low, lower high, we can find a place to sell it. We've got the 7-year auction tomorrow. It's on the F1 screen. On the F2 screen, FOMC statement took us up, and you can see we got a pretty clean break in the market right up here in the 126 even, 126.02 area. So selling 1s to 5s, sell 1. 7 to 11, sell 2. On the buy side, the breakout came from 24. We're at the buck, so 25, 29, buy 1. And 17 to 21, buy 2. But I hope you can see that, you know, even when you stub your toes and stumble around and you don't have perfect trade location, if you keep your head and don't panic and don't throw the towel in, and you got to work, you can do just fine at this. And it takes, once you get good at this, it takes very little capital to control a contract that can throw off 30, 40, 50,000 bucks per contract per year. And that's our objective, is to get you to that point. It'll change your entire outlook on life. Okay, we have that low way over there, 53.20. We've got this spill from 17. We just got above that high. So 8 to 12. Number 1. 15 to 19. Sell 1. And 23, 27, sell 2. Breakout came from the buck, and we're at 06, so we'll make 28 to the buck, number 1. Buying 21, 25, buy 1. And 13 to 17, buy 2. We've got some good eyes in the room, and we've got some good traders in the room. And we can all grow together, get a synergistic effect, and it helps keep everybody on their toes. Okay, gold looked pretty good today. And it did have a pretty good run up today. We caught both sides of the gold market early on. We had a 48 to 50, and then on the buy side, I think it was 43 to 45, and that held for most of the day. We have an outside day. On our F1 screen, outside days mean trading range. And right here on the FOMC meeting, the market took off, but there was our 48 to 50 sell, and there was our 43 to 45 buy. We were doing nothing. Big Janet and the Fed speak, and it's off to the races, and had a beautiful run up here. So 63, 65, sell 1. 68, 70, sell 2. There's going to be an inflection right here in that 58 area, so we'll make 56, 58, buy 1. You retest that breakout right there, and then 50 to 52, buy 2. Crude oil. Citi about 4 weeks ago said we were headed to $50. We'd get a 22% gain off the low. And right now that prog's looking pretty darn good. And we've incorporated that information in what we're doing. So higher low, higher high in crude oil. Find a place to buy it. We've got this volume, we said, starting above 49 on the F2 screen. It's at 49.10. And you can see how it starts up there in the 49, really 49.10 to 49 and a quarter. Got a P. That's selling at 85, 87. So stops above 49 is the play, but we haven't gotten to it. So 75 to 49 even, sell 1. 49 and a quarter, 49.50, sell 2. On the buy side, I think we can do a little better, but we'll put 48 and a quarter, 48.50 buy 1, 47.75, 48 buy 2. But I'm glad so many of you are having success in crude. It's a good contract, and it's got the volume, and it's got volatility, and it is allowed to sell by the powers that be. So we're doing very, very well with it. And I think we got, like today, plus 40 ticks. If you'd had a resting limit sell, plus 40 ticks, you would have filled and would have had a very nice trade. Be stuck with it a little bit. So, and even tap dancing with lousy trade location, able to get out of most of those trades unscathed. I think we've only had 3 outright losers in all these trades that we do on the close when we're guessing, but we haven't had much in the way of winners of late. It's been pretty slim pickings. So my ability to know where the market is going to close in crude oil, I'm not saying is slim and next to none, but it is a challenge. And it's real easy to call a close in the other markets. It's tough to call it in crude oil. Outside day in the euro trading range, we're just making new highs, so stops above 118. Could see that tonight. Fed's not raising interest rates anytime soon, so buy the euro, sell the dollar. That's what we saw right there. There's your K period breakout. So first sell is going to be 75. It's resistance, but stops above 118, sell 2. I think it's probably a pretty good play. Might see that in London. The breakout came from 43, so 30 to 40, buy 1. Put us right in the middle of this area right here, leaning against those 2 numbers right there, and then make 15 to 20, make 10 to 20, buy 2. So the interest rate differential is what's running this contract. And that's it for this July the 26th, 2017. I'm going to start my rehab this afternoon. Hopefully it won't be too invigorating or too painful. A lot of rehab exercises. Stretch stuff that needs to be stretched that doesn't want to be stretched. So anyway, stumbling through, worst case scenario. And I'll see y'all bright and early in the morning. Y'all have a great evening.